Financially raw, real, authentic wisdom with Lourens from Retire Rich and Happy.
Good morning, everyone, and welcome to another episode of Financially Raw. It's Thursday, the 25th of May, and I'm looking forward to a cold Thursday. Looking forward to a nice show with you guys this morning. We have a very interesting guest in studio today, and I'm going to introduce her to you in a few. So as per usual, we'll have some music. Those of you listening on our social media channels, hi everyone. When we have the music breaks, unfortunately on our social media we're not allowed to play the music, so we will have a short video, and it's the same video that I started off with last week, but there was a bit of an issue, so a lot of people didn't get it, so I'm going to do the same video, and that is the systems you need to create a transformational business. So in the breaks you will be able to watch that video, and it will show you how to develop a business where you can work on the business instead of in the business. As per usual, if you want to communicate with me in studio, if you are on our Berg studio website, there's a little shout out button at the top. Press that button and I will get the messages directly on air. And for those of you who are on our social media channels, you will see there is a WhatsApp number on screen. It's 082-801-6693, and you are welcome to WhatsApp me. Please do not message me on the social media channels directly, because I don't have access to all the streams. We stream on YouTube, we stream on LinkedIn, we stream on Instagram and on Facebook, so I don't see all of those feeds. So if you do want to ask me a question, or our guest Ananda a question, then you must please WhatsApp me in studio at 082-801-6693. So our guest in studio this morning is Ananda van Berg. And Ananda is from RRH Risk Management. Welcome, Ananda. Welcome to the show this morning. Tell us a little bit about yourself, who you are, your background in the industry, and what we're talking about today.
Thank you, Lourens, and thank you for having us in studio this morning. We're very excited to be here. So I'm Ananda, I'm the MD of RRH Risk Management, and we specialize in personal and business insurance, short-term insurance, let's rather say that. I was fortunate, I think, that I've celebrated 20 years in insurance this year. It's been a very exciting journey, a big passion of mine. So yeah, in essence, in a nutshell, that's it.
So 2 decades worth of insurance experience. So if you have any questions, if there's one person that's going to be able to answer you, it is Ananda. Ananda, you've also chosen our music for today, so we're going to have a few music breaks. And what are we going to talk about? I know it's short term, but what about short term insurance are we going to talk about today?
So I think the first definition is, what is short-term insurance? That's going to be our first point of discussion. Our typical risks that we face, I think everybody immediately theft comes to mind, but I think everybody's going to be quite surprised as to what our biggest risk in South Africa is at this stage. And then what is the pitfalls in short term? How do you risk management? What do you look out for? All those type of things. What do you need to know about your policy? It doesn't help you paying monthly for a policy and you actually have no idea what you're covered for, and then come claim stage, you're very unhappy with your broker. So in essence, that's basically what we'll be discussing.
Great, awesome. Looking forward to it. Again, if you have any questions, you are welcome to WhatsApp us in studio. You will also see on the screen is Ananda's contact details. RRH.life is the website. Ananda@rrh.life is the email address, and 082-427-3493 is the contact details. If you want to get hold of Ananda, ask her any questions to find out a little bit more about your policy. So let's go for our first music break. Let's first get all the guys on our social media onto the video. So you guys are going to watch the systems for a transformational business. You want to get to a point in your business where if somebody leaves or something happens, another person can step in and within a half an hour figure out exactly what needs to be done. That is duplicatable. Okay, so what is the first system that you need to look at? The first system, and this is the lifeblood of all businesses, is the lead generation system. Guys, if you don't have a proper system that generates potential new leads or leads for potential new clients, your business will not grow. You can't just sit back and say, well, I get enough word of mouth referrals to keep myself going. You'll never grow to a large business if you have that attitude. You have to create systems that generate leads on an ongoing basis. You have to be proactive with your lead generation system. Don't just sit back and wait for people to ask for quotes, send out quotes and hope for the best. That is not the way that you build your business. So what's very important when you start looking at your lead generation system is that you are clear on your unique selling proposition or unique benefit proposition that you have for your client. That is so important to understand. What differentiates you from the company next door, the other companies that do what you do? And we very, very seldom have a business that has no competitors whatsoever. You usually go into a market where there are other competitors that do something similar to you. They might not do exactly the same thing, but they're in a similar industry. So you need to be able to differentiate yourself, because if you are not clear on what differentiates you from your competitors, how on earth will your clients or your potential customers be able to differentiate you? And if they have nothing to differentiate you from everybody else, what are they going to use as a differentiation? Price. And the moment you get into that situation where price is the only thing that you can compete at, you then part of a lottery, because you'll win some, you'll lose some, because you don't know what other people are pricing. So you want to get away from just competing on price in your business. You want to create a unique selling proposition and be very clear on how that differentiates you from the rest of the competitors. And guys, please, things like we are always honest is not a unique selling proposition. There's no way the client can gauge whether that is true or not when he makes his selling decision. So you have to be clear. We do things this way, which benefits you in that way, and therefore we are different than everybody else. You need to be clear on that. Sit down when you start your business and take as much time as you need to create a proper, unique selling proposition, to make sure that you know how you are different so that you can tell your clients or give that message through to your clients. And only once you do that, you create a lead generation system. So what you want to do with your lead generation system as well is you need to specifically go and see who your target market is. You need to understand who the market is that you are catering to. A mistake that most people do when they start a small business is they are so desperate to get clients that they will accept anybody. So if you ask a person who's your client, they will go anybody. If people say I will make it work, and that is exactly the opposite of what you actually should be doing when you start your business. For those of you on YouTube, you'll see what I do. I'm going to try and explain it for the people who are just listening. But what most people do is they have this view of their market. They will accept everybody. And as they get more and more successful, they want to tighten that view of theirs to only a small niche in the market. So eventually, I just want to work with high net worth individuals, or eventually, I just want to work with individuals that stay in the upmarket areas. But initially, I'll accept everybody. And that is exactly the opposite, because what tends to happen if you don't know exactly who your market is, you then can't create a proper marketing message for them, which means you're going to get people that you're going to have to do business with, that you're going to work for less than what you're worth, make almost no profit. They're going to, I don't want to say waste, but they're going to spend your time where you could have spent your time on somebody or a deal or a project that is more lucrative than what you're spending your time on now. So yes, I know in the beginning, and that's why it goes back to don't start a business when you need the money. Yes, now I went through all the screens. I started with guest full screen, then my full screen, to get to the double camera screen. I was on all the screens. Welcome everybody, welcome back. That was Phil Collins and In the Air Tonight. There's a whole story. Have you heard the story behind Phil Collins and In the Air Tonight? There's this urban myth that he and his best friend went swimming. And his friend drowned, and a guy stopped, and he ran for help, and the guy just drove away. And then eventually he found the guy, and when he became famous, and in one of his concerts, he gave him front row seats. And then when he played this song, he wrote this song for that guy and what happened. And then he put the spotlight on the guy, and this was it. So but that turned out to be an urban myth. So it didn't happen. It's
a bit of a depressing story you have there this morning, but thank you.
It did not happen. I believed fully when I was a young man, I believed that story was true. And then eventually I went to find out, researched it when Google became a thing, and it turned out to be a complete urban myth. Anyway, on that interesting but useless information, let's start talking a little bit about short-term insurance. So the first question is, for those of the people who don't really understand the difference between what is short-term, what is long-term insurance, what is short-term insurance?
So, Lourens, I think, what's interesting is always when you either market or say anything about insurance, the moment you say the word insurance, people automatically, and I don't know why, they go to medical aid. I don't know if people are, because of our government hospitals or things like that, are so scared that medical aid is almost first in their mind. So the moment you say insurance, people go medical aid and life insurance and all that. And I think which is a benefit to us side, and especially to Nexus, because I promote short-term and everybody kind of, it's everything. And because Nexus basically comprehend everything. But yeah, in essence, short-term is non-life insurance. So easiest way to understand it, everything that you can basically touch, I can insure. The only exception being liability. Liability, the event we unfortunately can't touch, but everything that you can touch, I can basically insure for you.
I can touch myself.
Yes, you can touch yourself, and I can give you personal accident cover for that. Okay. So yeah, just to make it easy, a life insurance policy you can't touch, your medical aid you can't touch, anything else basically short-term insurance will be able to cover for you to a certain degree. And I think what's taken me 20 years basically and has grown my passion tremendously in short-term insurance is the range of products that you get in short-term. Being personal to a business, there's 23 different classes in business insurance. So you can imagine me walking into a business. The last time that guy reviewed his policy was 20 years ago with the broker he met on the golf course 10-1. And he's sitting, I sat with a restaurant the other day, and quite a famous brand, so I won't call the name. And he's sitting with a standard business policy, no food poisoning liability, nothing. And so basically your biggest risk you're so exposed to. Where short-term insurance, there's so many classes. The underwriters has really done a tremendous job where they've really customized it to every need you as a business owner could have as to I'm exposed to this risk. As a building contractor, it doesn't help your office contents, it's covered. It's not your biggest risk you're going to recover if something happens in your office. But on building sites, if that building comes down or one of your guys gets hurt or something like that, that's a big risk. You're not recovering from it. It's millions. So yeah, I think that's what makes short-term so incredible, is it covers such a wide variety of risks.
I think one of and what you've said now makes so much sense, because there's this idea in people's minds that we must just try and get the cheapest premium. Yes. So what happens is a policy is taken out 20 years ago, and then the next broker comes, he takes that schedule, just quotes on exactly the same thing and try and give the client a
yes.
better premium. So he takes over the risk. but the risk has changed, but they don't adapt. And then the next guy comes, and the next guy comes, and they all just chase the cheaper premium. And eventually what the guy is insured for and what he needs is two completely separate things.
Yes.
And that creates an issue not only for the client, but for you in the financial services industry as well, because every time you take it over, you take the risk on for the advice, or the advice risk on. Is that correct?
Yes, no, that's 100% correct. And, you know, if you haven't, honestly, I kind of, and no offense to other brokers out there, if I'm going to offend anybody, I kind of, a little piece of my soul dies when a broker walks in and say, I've been in the industry for 2 years. Because quite honestly, in 2 years' time, you can't gain the experience and the knowledge. I mean, I started as a receptionist in Santam, then I went into junior underwriting, and then into senior underwriting, then into claims and so forth. So you've gone through the whole process, seen every aspect of a business and how it works and how the risk is underwritten, how the actuaries looks at it, all those type of things. Without that knowledge, you can't sit in front of a client and say, you know what, I know what I'm talking about. I know what risk you're exposed to. And then to have the knowledge to know what insures you the best, because it doesn't help to chase premium. If I save you 20 Rand, great, but at the end of the day, I'm going to cost you maybe 2 million. Which one do you want, kind of thing?
And there's this perception that all insurance policies are created equal. It's just looking at which one is the cheapest.
Yes.
If you can get the cheapest premium, the rest doesn't really matter. Does it matter?
Absolutely. You know, all so the policy wording that it's based on is multi-mark 3. It's been there since day one, kind of thing. I think Noah's Ark was insured on those basis.
Noah went to Santam.
Yes.
I think there's a flood. I mean, flood damage insurance.
Yeah, and pet insurance. So multi-mark 3 makes up the foundation of your policy. Let's call it that. That's where we as a broker on claim stage will come in and say, but my multi-mark 3 policy wording reads this. So that's never, over the past 20 years that I've been in the industry, that's never developed. That's never really changed. But your product wording, and you must always remember your policy schedule overrules your policy wording. So if I sit in front of a client and
Just
I
say that again, sorry. Just explain that again. Your policy schedule overrides your policy wording.
That's
Just
correct.
Explain to the listeners what is the schedule and what is the wording, because I think a lot of people don't really understand the difference between the two. Yeah, because that's an interesting point.
Okay, so your policy wording, let's call it, it's your Bible. So basically that is what the insurance company uses to write their policies. So my product might be, let's call it a hospitality product, but my ultimate wording is my multi-mark 3 wording. Then there's a couple of adjustments on my policy schedule. So my policy schedules will say, AJ's Burgers. Sorry, AJ's Burgers, if there's a company like that. AJ's Burgers.
And buy burgers from AJ's Burgers. Okay.
I don't have burglar bars on my windows. I am in a high risk area. Those type of things. So as a broker, I'll sit down with my client and see what his risk is. Is there certain times that it's a high volume, so there's bigger risk for theft, those type of things. And I'll write certain memos into his policy schedule. If my insurer accepts those conditions and those memos, that will overrule my policy wording. So my policy wording might say, between the hours of 8 and 10, my client will pay an additional excess of 2,000 Rand should there be theft. My policy schedule, I might write and say, listen, my client, 8 to 10, nothing is happening there. So I'm going to change it and say, between the hours of 8 to 12, they won't apply additional excess, and because there is no risk. If my insurer accepts those conditions, it overrules my policy wording.
Okay. So the policy wording is basically the standard wording of
Absolutely.
That rules the agreement.
Yes.
And the policy schedule is almost like an addendum to that agreement. It says, out of all of this, this is what actually happens with this client specifically. Okay.
And that's why it's so important to sit with a broker that has the knowledge, that can say, but you know what, yes, it's a black and white document, but I don't have to honor it. I can change it. We have the authority to change something like that.
So you can negotiate. And
yes.
that's the thing that a lot of people think is that, well, this is what the insurance company says, so that's how it is.
Yes.
They don't feel like they have the power to negotiate. And that's, I think, one of the benefits, and let's jump, and I know I'm jumping ahead now, but one of the reasons on why have a broker instead of going direct. So let's quickly have a short music break, and then when we come back, we have that discussion on, isn't it better to just phone one of these companies or go online, compare quotes, get the cheapest quote, and then just put it directly. Surely you save money by doing that. So you can hear the sarcasm in my voice. You save money by doing that. So let's have that discussion when we come back. Those of you listening on our social media, we're going to continue with our video on the systems for a transformational business. And then those of you on Berg Studio, we're going to go for a short meeting. Because if you start a business when you need the money, you are desperate, and then you'll accept any person that comes to you that wants to do business with you. You don't want to be there. You want to start a business for the gain that you can get. Then you want to make sure you understand who your market is. What does your target market look like, and be as specific as possible. And then you want to focus your whole lead generation system on that target market. And as you get better and bigger, you then start expanding your target market. So instead of starting wide and going tighter, you start tight, and then you start expanding your target market going out. Because you build capacity, you're teaching other people. Remember, transformational business. What can I teach other people to do? So as you are teaching other people, you can offer your services to a bigger and bigger target audience instead of trying to accommodate everybody initially. Okay, once you have done that, once you have gotten your unique selling proposition, understanding what is the problem that you're going to solve for the client, once you have defined exactly what your target market is, you then want to create a proper marketing message. So also, once you know what your target market is, you'll get a better idea of where you can speak to your target market. Because what do we get? We get marketing companies these days, and all they want to do is social media marketing, social media marketing, social media marketing. And for some products and services, social media works. But for a lot of products or services, it doesn't work. If you are in the market to sell retirement homes and retirement villages, will Instagram be your ideal marketing platform? Well, probably not. So you need to first understand who your target market is, and then find a way to speak to your target market. Where are these people? Where do they hang out? What do they watch? What do they listen to? Where do they engage with certain products and services? And start focusing your marketing efforts to those places, instead of just having the shotgun approach of, well, social media is the answer for every marketing problem out there. I promise you, and I can attest, it is not the answer to all marketing problems. Okay, so once you know how you're going to talk to your people, who your target market is, you can then start creating your marketing messages to these people, whether that is through flyers, whether it is through social media, whether it's through traditional media. It doesn't matter. You need to create a proper marketing message for your potential customer. This marketing message of yours, you want 4 elements in that marketing message. The first element of your marketing message is to state the problem. So you want to make sure that the customer understands and can relate to that problem. You want the guy to go, I feel like that as well. Or I've experienced that as well. Or I had that pain in my life as well. So you state the problem. Once you have stated the problem, you then explain how your product or service addresses that problem and will solve that problem for your potential customer. And here you want to bring in your unique selling proposition as well. How does your company, your product, your service solve that problem for your potential client? But then the third one comes in, and this is one that a lot of people miss out on. They state what the solution is, and then they have a call to action in missing out on this third part of your marketing message. And this third part is extremely, extremely important, because the third part is about emotion. It's a Welcome back, everyone, and that was, who was that? That we listened to, Demi Lovato and Confident, and that was the song. And those of you listening on our social media channels, welcome back. And you are watching the Systems for a Transformational Business. So that teaches you a little bit about the three main systems that you need to change your business from being transactional to being transformational. If you want to see the rest of that video, we probably won't have the time to get through that whole video. If you want to watch the rest, you are welcome to go to our YouTube channel. Just search for iRetire. Please like and subscribe. And we have over 300 different videos on there with a whole range of topics around financial management, risk management, financial planning, business, entrepreneurship, everything. So go there. I'm sure you will get a lot of benefit from there. While we were on our break, we had a question come in, and it comes from Insurance Monkey. Now, I don't know if that means it's like a brand or if you're just not very clever in insurance. So whatever side that falls, we are going to ask the question, and I'm sure Ananda will be able to answer. So Ananda, the question from Insurance Monkey is, how do I know if I'm under or over insured?
So Lourens, let's take your building for example. To get an estate agent out to come and evaluate your property and give you a report on what your property is worth, I don't think is the best option. As to they take the market and they take all those type of things, but what you should really do is you should have building costs in mind. There's a couple of things that needs to be kept in mind. So ultimately you can phone your broker and say, listen, I need to evaluate my property, please get somebody from the insurance. And what's great about doing that, for the insurance to come out and evaluate your property, is that should come claim stage and something has happened, they can't go and say, but you're underinsured, because they determined the value of your building. It's insane to see. I mean, I've sat with clients, then their property is insured for 3.5 million, for example. 2 months later, we have a claim, and I mean, fortunately, we've got broker appointment and record of advice and all those type of things to back us to say, but it's 3.5, it's not enough. And it's like, no, but my neighbor's house just sold for 3.2, so I know I'm good. And you're not good. You're not an expert in that field. You should have an expert. And then his property is worth 7 million. I mean, that's a massive difference. So ultimately, being your house contents, what's very interesting is I'll sometimes sit with clients, and I've had one client recently that said, oh no, come to my bedroom, I want to show you something. So it's like, okay. And opening his cupboards, this man has like 400 t-shirts type of thing. So you know what you kind of collect. You know, like as a woman, we've got insane amount of shoes or a handbag collection or things like that. I know it's time years and I know it takes a lot of time, but sit down and write, because literally if you have to think, I come home tomorrow, touch wood, and my house is burned down to the ground, I have to replace from my earbuds literally to the teaspoon, what's that going to cost? And I can guarantee you're almost underinsured.
Yeah, I think two things from my side is you need to understand what you're actually insuring.
Yes.
What is let's look at the building insurance that you're talking about. A lot of people think that, oh, but I can only sell my house for 3 million, so therefore my building can't be more than 3 million.
Yes.
Or if I had to build this house, then I would be able to build it for 3 million, then surely 3 million is enough. But they need to understand that insurance value doesn't just include rebuilding the property. It includes a whole bunch of other things that needs to happen if you have total loss. And I think you need to share with the listeners what that includes, so that they understand why their building insurance sounds like it's such a massive value against what they bought their house for.
So basically, let's say you get home now and your building has burned down to the ground. So what will happen first is obviously a assessor will be appointed and sent out. Then that rubble needs to be removed. You can imagine, I mean, just removing a little bit of grass at your house is a couple of thousands already. So you can imagine what the cost of something like that is, removing all that rubble. Then they have to get engineers out to the property for foundations. All those things need to. So literally, there's so many costs involved before one brick has been bought.
And usually, you don't have a house that goes down all the way to the ground. It doesn't burn down to the ground and there's nothing. The bricks and everything doesn't disintegrate and it's gone. So they have to demolish first, and then have the rubble removed. So that's already 2 steps that's hang of expensive, that you don't have when you're just building a new house. Okay,
So then an architect needs to be appointed. For obviously they'll have to go based upon the design you had, but somebody still needs to do their job. It has to be approved. All those things needs to happen, which in technical you're not paying for. You don't even realize it's part of something that you have. So besides the builder that has to come and have the materials and build, there has to be electrician, there has to be a plumber, and the architect has to go through, the engineers has to be there before all the signing off. So before they give your keys in your hand again and say, well done, here's your house again, there's so much that happens then. There's so much that you're actually covered for. And I've said, probably 90% of clients like, oh, the assessors, I won't say what they say, but unfair in the insurance, and they love to apply average. And yes, I've also been upset with assessors. But what you must realize, if you're only paying 60% of value to the insurer, you're basically only insuring 60% of your building. So how is it fair to expect the insurance to give you 100% when you've only been paying 60%? So that sometimes I think almost it's a lack of education as to what exactly you're covered for, and how the whole process works. But I realize if you're only paying 50%, you're going to get 50% back, and that's fair.
So you need to understand, in looking at household contents as well, maybe just explain what is insured through household contents. It's not just my furniture and my TV and my hi-fi. Show my age, my TV and my furniture and my fridge and those kind of things. It's a lot more than that is insured, that you have to calculate the value of for your contents insurance.
Well, Lourens, I think if you just look at I think we're all complaining every month of what groceries cost monthly. It literally goes up every single month. So if you had to go home tonight and for some reason all your groceries are gone, be it from your salt to your pepper to everything, what that's going to cost you to replace, literally the basics. So it's not only your couch and your TV and your furniture, it's your food, it's your spices, it's your toothpicks, it's your, if you open your bathroom cabinet, it's your earbuds, literally it's everything that's insured. And if you start calculating that goes to an insane amount, because we all accumulate throughout the years. And something that I might have, and that's where people go very wrong. Corey Craft has a special this month. I'm buying a couch that was 20,000 Rand for 15,000 Rand. And they're like, oh no, but my couch is only 15,000. No, it's not. You got it on a special for 15,000, but it's worth 20,000 Rand. And what's amazing to me is people won't, in contents insurance, it's so cheap that the difference between 15,000 and 20,000 might be 15 Rand, if so much. But people will sit and argue about 15 Rand as though I don't want to pay the 15 Rand, it's too much, insure for 15,000. But yet, when I can't give you then exactly what you had before the last, you're not happy with me as a broker, I didn't do my job. So yeah, it's literally every single, it's the curtains on your windows, it's everything that you have in your house.
And the big thing there is, I think that if you technically go specifically to policy wording and what should be counted under contents, I think 99.99% of people are underinsured.
Yes, absolutely.
With contents.
Yes.
Because we do not look at everything.
No.
We, especially young people, when they start, they go, I've only got a couch and I've got a TV. 100,000 is more than enough. But they don't think about their clothes, their shoes, and all of those kind of things that needs to be insured. I know we're digressing a little bit, but this for me is a very interesting point, and it's something that people don't always understand is, so what is the consequences of being underinsured? How does average work? Because that's the thing that a lot of people say, but I'm insured for 200,000. They only stole my TV, which was 20,000 rand. Now they don't want to pay out the 20. They only want to pay out 10,000 rand. All these insurance guys are klomp-skelms.
Yes.
So just quickly explain how average works. What's the consequence of being underinsured?
So the consequence of, so let's call it on a building, for example, just to use a building as an example, because it's an easy example to use. Let's say my property is worth 1 million. And I insured for 600,000. That means I am underinsured by 40%. So basically, what will happen is not only will I won't get paid out the 60%. That 40% average gets deducted from that 60%. So basically, you're going to be paid out. Should there be a complete loss, you're only going to be paid out 200,000 rand. So the consequence of something like that, and you must also remember, I sometimes think people think insurers are idiots, and some of them are, but the reality is, you'll get a quote request in front of you, and then it's a small little flat in the middle of nowhere, and this guy apparently has 6 plasma, and now you can see my age if I'm going to plasma, has 6 plasma screens, yet he only has a 1-bedroom apartment. Really serious. And then you'll get somebody that's got a 9 million rand building and he's got 1 TV. The insurance can also look at that. So if I only insure my contents, because the minimum content you can get now is 250,000, because most insurance don't want to do motor loan policies anymore, which doesn't really make a lot of sense, but that's besides the point. So if I've got 250, my contents is really only actually worth 2 million. You've only insured 20%. So that 20% is going to apply to an item. So I'm claiming for my TV. My TV is 10,000. I'm only going to get 20% because that's what you insured. Only 20% of your item.
Well, so basically, the insurance company says that, listen, you should have insured 100%. You chose to insure only 20%, which means you chose that 80% is self-insured.
Yes.
So you have self-insured yourself
yes.
for the extra 80%. Just last point on this. You mentioned that you could ask the insurance company to come and do a valuation of your property. First part of that question is, does it include the contents as well? Can they come do a valuation on your contents? And secondly, is there a cost involved? What does it cost to do this, if any?
Okay, so one of my favorite products that I use it's a high net worth product. It's one of the arms of Santam, and as we all know, Santam, you can't go better. But there's 2 options. You can either do it via monthly payment, and it goes over 6 months. That it's part of your insurance premium. It works out to about 60 rand a month, kind of, that you pay. Or it's an upfront of 700 that you have to pay for them to come out. But believe me, I don't know, in our economy and everything, 700 rand is a lot of money, and I think that's why they made the second option of the 60 rand type of thing. But looking at a loss and what you could suffer, 700 rand is a drop in the ocean.
Yes, yeah. And the thing is, if you have the 60 rand a month, can you ask them to come and reassess that after a year or 2 years?
Yes.
Okay, so that at any point you can say, listen, I just bought some new stuff. Please come and review.
Yes.
Or I did some renovations to my house. Please come value it again. That kind of thing. Okay. Now that's actually not a bad benefit to have. Okay, so I hope, Insurance Monkey, I hope that have answered your question. So let's go back to what we were speaking about before the previous music break. Why have a broker? Why not just go direct? Surely these guys sitting in a call center knows just as much as you do after 20 years. And I'll save on the broker fees and I'll save on the commission. What do you tell people like that?
So the irony of your direct insurers is that you think you're not paying broker commission. You are in fact paying a broker. It's an outsurance broker or my way broker or whoever. I'm not want to call names. So ultimately there is a broker in the background that is getting that commission. So if you think you're saving premium or commission, you really are not. The problem with it is this. Their job is to sell you a product. So they come in and say, okay, Lourens, you've got a house and you've got contents and you've got a motor. Your current insurance policy, and if I'm wrong, I gladly invite any one of those to come and prove me wrong. Is they come and they sit and they say, okay, your previous policy, you've got a Jag now, so we're insuring the Jag. I can almost guarantee you they won't ask you, Lourens, do you have wrapping on your Jag? Do you have you put a sound system in your Jag? Is there navigation in your Jag? There's so many elements to your car actually that they're taking the schedule that you had and they're saying, oh, but we can save you 600 Rand. Great, but is that right? Have I underwritten that policy? Have I looked at your risk? What does Lourens do with his Jag? How many hours does he spend on the road with his Jag? Those type of things. And then people will come and say, oh no, but I've saved 600 Rand via whatever insurer, but my excess, have you looked at your excess? So I'm saving, but my excess is now 20,000 Rand, where your standard insurer, that be the likes of Santam or Hollard or one of those, your excess structure is something, again, that can be negotiated with the insurer, but it's probably 10% of that. So and also, it's not, I always feel my relationships I have with my clients it's a very personal relationship. Ultimately, I'm the one that gets the phone call at 2 o'clock in the morning to say to me, I've just lost my phone. There's nothing I can do for you at 2 o'clock in the morning, but ultimately that is the trust that must build, that I will make it better. I will get you another phone, or what an accident scene, I'll get you the help that you need. I'll get you to safety kind of again. So those, I feel, the call center environments, you're a number. And I don't know if everybody else, I don't like to be a number.
Yeah, I mean, today you phone and you speak to one person, and tomorrow you phone, you can't speak to that same person.
Yes.
Again, you have to speak to another person, and then they didn't do anything, but you can't get to the guy and keep them accountable.
Yes.
So you're 100% right. You're just a number. With the call centers as well, and you mentioned, or you touched on that, is what I've seen with direct insurers is, when you as a broker work with a client, you basically tell the client, you ask the questions to tell him what he needs to insure. When you phone a direct insurer, they don't tell you. You have to tell them what you need insured. And how do you know?
Yes.
So they're almost moving the responsibility of the advice back onto the client themselves.
Yes.
And a client says, I have this car and I have this household, and that's all they do. Where you would engage with your client and say, but what about this? Have you thought about that? Have you thought about that? And that makes sure that they are more comprehensively insured.
Yes. And, there's certain little pitfalls. I helped a client, and he wasn't at that point a client, fortunately, after he signed over to me, but I helped a client that was placed with one of the direct insurers, and his car got stolen at Menlyn Shopping Centre. Now, not one of us, when we have that phone call over with the call centre, I'm not going to say, listen, during the day I go to Checkers, and then I go to movies, and then I'm whatever kind of thing. We kind of say, this is my home address, this is my work address. My car needs to be insured for business hours, or those type of things. I'm not going to say all those things. And I almost said the insurer, basically rejected the claim based upon the fact that he never disclosed that he goes to Menlyn Shopping Centre. Now, how pathetic do you want to be? So eventually that claim was paid because it went to Ombud, and I mean, that's so on so many levels unfair, it's not even funny. But that's exactly, they go on the fact that you had to know. You're not a specialist in insurance. It's like me going to an engineer and wanting to tell the engineer how they should do their job. It's impossible.
Yeah, and from an FSCA perspective and the Phase Act and everything, it's unfair, but life is not fair. But the call centers aren't judged as harshly when it comes to advice as a broker, which is ridiculous actually, because they do the same thing. But if you are registered to do call center sales, then you don't have the same compliance risk as a broker working directly with a client. So also understand that they aren't judged as harshly, which means they aren't held as accountable for the wrong advice as a broker is. So if you want the right advice, go to a broker. They will sort it out. Last question on this topic before we go to another music break is, cashback bonuses. Yes or no? Is it worth it? Because it's worth me going to that company because they give me some of my premiums back after 5 years. What do you say about that?
It's great to have bells and whistles. It's really fantastic. But get that to something that doesn't mean anything in life. Get those, if I sign up with clicks, I get rewards. That's worth it. That's fantastic to have. When it comes to something serious like insurance, for example, and your insurance policy, it's not the reason to have a policy. You should be insured. It shouldn't be highlighted as to, because remember, if I don't claim, the likelihood of you claiming in 5 years is very much there. So if I don't claim, if I don't use my cell phone while I drive, your cell phone is going to be used regardless if it's on your seat because it picks up signal. If you use your navigation on your cell phone, it gets picked up, the signal. If you get a WhatsApp while you're driving, it picks up. So that counts against you. So ultimately, are you really getting a benefit for the sake of going to, I don't want to say a proper insurer because that sounds wrong, but for the sake of really getting the cover that you need, if you do get the bells and whistles with it, great.
Yeah.
But it's not the reason to make your decision on.
That's exactly my approach to that as well, and that extends to the life insurance market as well, with also the cashbacks and the bonuses.
Yes.
You first do the primary function. That why do you have this insurance?
Yes.
You have this insurance to be covered in the event of something happening to your car, your household goods, your cell phone, your property, those kind of things. So you first get the best possible package and insurance product for what you need. And then if there's any added benefits, fantastic, that's a bonus. The problem is that the marketing guys have changed that whole thing around. And they're selling on the bonuses and all of these bells and whistles. And yes, it does your insurance as well. That's not the right way. And that's one thing I want to say to the listeners as well, and those people watching, is become a little bit more serious about your insurance portfolio. I get this feeling that people, they don't take it as serious as they should. And I'm not saying you must sit at home the whole time and worry about what's going to happen. But spend the time to make sure that you are correctly insured. Spend the time to make sure that your life insurance is sorted out, your medical aid, you've got the right cover, your short-term insurance. And be serious about it because it's a serious matter. It's not a serious matter until one of those things happen. But if you don't spend the time up front and one of those things happen, you're probably not going to need that again because that's all she wrote.
Yes.
You're not going to be able to recover. So take that time, take it serious. And that also, when you start taking it serious, you probably won't go to a direct insurer because they're not going to take it serious. A broker will take it serious. Okay, so let's take another music break. Those of you watching on social media, we're going to continue with systems for transformational business. And when we come back, we're going to talk a little bit about common risks we face in South Africa. You said that the theft risk that we think is the biggest is actually not the biggest. So I would be curious to find out what is the biggest one. So don't go away, stick around, and after our song, we will address that issue. So those of you watching on social media, let's have a look at systems for about creating or engaging the client's emotion. Number two, how does your product or service address the problem is not emotion, it's logical. It is the logic of this is what we do. The third one is the emotion of what will it mean to you once we have solved this problem for you. So you see the difference. So you first engage the logic and then you help them make a decision emotionally. Because we as human beings, we make our decisions emotionally and then we defend that decision through logic. So we don't make decisions logically. So if you make your marketing message only focus on logic, people won't make a decision. They will postpone, they will think about it later because their emotions haven't been engaged. The third step engages the emotions, and once the emotions is engaged, then you can ask for a call to action. Okay, so the third one is what will it mean to your client once you have solved the problem for them? And the fourth step, or the final step of your marketing message, is a call to action. What is it that you want the client to do? And to make that call to action as simple as possible. If you have to make that call to action 3 or 4 steps, it's not going to happen. So the call to action has to be click here, SMS this, WhatsApp that, phone here, something very, very simple that the client can do. The simpler you have it, the higher or the bigger your chance that the client will actually take the necessary action to do the call to action. So what we're going to talk about the last session is the 2 last systems that you have to create. The second one, so the first one was the lead generation system. So this is the fuel that you have to put into your vehicle. Without that, you can have the greatest business, you can have the greatest vehicle, you can park a Ferrari in your garage, but that car is not going to take you anywhere unless you put the fuel in. So that is where your lead generation, if you don't consistently get leads into your business is dead. It cannot take you anywhere. But also, if you put the wrong fuel in, or you don't know how to use that fuel, then you're not going to go anywhere in any case. So that's called the lead conversion system, and that is basically your engine of your vehicle. Because if you put fuel in the car but there's no engine in the car, that Ferrari is not going anywhere in any case. So the lead conversion is your engine of your vehicle. And you have to have a proper lead conversion system, and you need to have that system worked out so that it is a duplicatable process that you follow. You can't have one way of working with one of your clients and another way with another client and another way with another client. You have to have a duplicatable, predictable system that you do, from taking the client from him contacting you or you getting in contact with a client because he has the potential of becoming a customer of yours, all the way through to him actually placing the business with you, buying from you, or using your services. So that is your lead conversion system that you have to have. You can't just, lead conversion system isn't the client sends you a request, you do a quote, send the quote out, and then you sit and wait to see if the client accepts the quote. That is not a lead conversion system. A lead conversion system is you get the request from the client, you communicate with the client, you find out what the client's needs are, what they want to achieve, what their budget is. You go and create a plan for them to solve their problems in the best possible way for the lowest possible cost. Engage with your client, educate your client throughout the process, and then you get him to place the business with you or make use of your service. Now imagine a client goes to one company, and all the company does is they draw up a quote, they email him the quote, and that's it. They just wait. Another company takes the time and the effort to engage with him, understand exactly what he's looking for so that they can supply him with exactly the right product or service for his specific needs, to solve his problems, to make his life more comfortable and easier, and make sure that he does everything right the first time. But they are 10 or 20% more expensive than the other company's quote. Which one of these companies do you think the client is going to do business with? 90% of the time, it's going to be the company that has shown an interest. There's a saying that says people don't care how much you know until they know how much you care. So if you have a proper lead conversion system, people will feel that you care. They will feel that you have their best interest at heart, and therefore they will place the business even though you are not the cheapest out there.
And welcome back, everyone. That was Lady Gaga, Edge of Glory. And we are talking with Ananda van der Berg from RRH Risk Management. And again, if you want to speak to her, want to get in contact with her to discuss whether you are overinsured or not, and whether you are correctly insured, you are welcome to contact her, ananda@rrh.life or 082-427-3493. You can WhatsApp her or call her.
on that. She is one of those people that still take voice calls. She actually answers her phone. So you are welcome to give her a call, and she will help you structure a portfolio that actually fits what you need and potentially save you a little bit of money by cutting out the things that you're paying for that you don't need. So when we left, we said we're going to talk about some of the common risks we face in South Africa. We only have another 5 minutes or so available. So let's do this as our last topic, and then we'll definitely have another show where we can expand a little bit on other things. I mean, there's like 10 other things that we still wanted to discuss. But what are the common risks we face in South Africa that people need to take in consideration when structuring their short-term portfolio?
So very interesting. I think, like I said earlier, that the moment you say common risk, I think, especially in South Africa, we all immediately will jump to theft. And yes, theft is obviously a very, very high risk that we still face. But 30% of claims in South Africa is due to water. That makes up 30%. So you can imagine, I mean, accidents, there still needs to be theft, all those type of things. But water damage is our highest risk in South Africa that we face. So I want to put importance on people understanding that, be it your home, be it your business, look at your gutters, look at your roof. If you don't maintain that, you can't expect the insurer to honor your claim. Our weather patterns is all over the show type of thing. I mean, it feels to me like I'm living in Cape Town at this stage, having rain now. But yeah, so water is our highest risk in South Africa at the moment, more than theft. So very, very interesting.
Gee whiz. And is that like rain damage, or is it like internal burst pipes, geysers, or a combination?
No,
Which
it's
one
due
of
to
those
weather.
are the biggest one? The weather.
The weather.
Goodness gracious. Yeah.
Yeah, so yeah, like I said, 30% of claims in South Africa is due to water loss.
And obviously what will happen is when insurance companies pick up these things, like you've now seen the statistics, they will start clamping down on things like maintenance. So they'll start, where in the past maybe, you must tell me if I'm right or wrong, in the past they would look at it and overlook it a little bit. But because it's now that high, they would be more strict and say, but hey, you didn't maintain your gutters. So you'll get those kind of comebacks where insurance companies say, but why haven't you checked your roof,
maintained your
leaking?
property? Yes, yeah. No, absolutely. A lot of more emphasis would be put on it than previously, although it's always been something. I mean, obviously maintenance has always been a thing, and people get very unhappy when it's due to maintenance that something's gone wrong. But I mean, if you start arguing the point, you can see both parties kind of points that they put across. But yeah, so water, very, very high at the moment. Obviously theft is a very high risk. But what's interesting, and that's also, and I'm going to link the two as to why it's so important to have a broker and theft cover. I sat in a networking event the other day, and the venue we use is a yoga studio. Now, at this stage, she's not my client. Not yet. And they asked me typically as to what would I do if I walked in there in my industry. And she's got lovely shelves on her wall that's got beauty products and all those type of things. Now, beauty products can range from 200 Rand to 600 Rand tube type of thing. And obviously she does yoga and all those type of things in studio there. And she sits with no liability cover. Now, the moment you start mitigating risk here and you walk in there, if I walk in and I steal a 300 Rand product, it's not a problem. It really is. It's not going to bring you, regardless of how much money, if you make 500 Rand there or if you make 50,000 Rand there, it's not going to break you. But if I come and I jump on your little trampoline and I break something and I feel that I'm just as to suing you because it's because of you and your advice you gave me that I've been jumping up and down here, I'm going to sue you. I'm not recovering. As a business owner, I'm not recovering from that. Then again, we can go one step further and say, okay, but you know what, your display cabinet, just put a little door on it. Get somebody to make you little cupboards, and then you don't even need theft cover type of thing. Or we can have restricted theft cover for after hours. But you're in a business park, there is security guards, and that's why it's so important for us to come in onto your premises and have a look. Because I might tell you, yes, theft cover is important, but it's such a small risk that the others you're exposed to, it's going to close your doors type of thing. But okay, So theft, obviously power surge is a massive thing. And I think if you have insurance cover, you've received the email as to saying that there is restrictions. Quite honestly, everybody that's listening, I want to challenge you as to go and look in your policy schedule as to what you're covered for power surge. I'm almost going to put money on the fact it's either 20,000 or 50,000, one of those two amounts. And honestly, if a power surge runs through your house and I'm going to give you 50,000 Rand, what are you replacing first? Because your fridge, your TVs, your wife's GHG, all that's not going to be covered. Where there is products in the market that still gives you the full sum insured of your contents for power surge. So power surge has become a massive problem for us, obviously, due to our lovely government. And then property damage is one of our biggest exposures still.
One last topic that I want us to discuss before we close. We're already at 11, so we're going to go over with 2 minutes. You've mentioned some things about the most high-risk vehicles in the market. Which of these vehicles are high risk? Because that's something people in South Africa need to take in consideration when they want to buy a vehicle as well. Because I believe that if I want to buy a new vehicle, and you know this, one of my first calls is to you to say, please tell me what my insurance is going to be, because it's part of my cost of ownership of that vehicle. And I think a lot of people don't. They look at the car first, find what they want, and then buy it, and then worry about the insurance, and then they fight and they're upset because they're paying higher insurance.
Yes.
So what are high risk cars? And I know you don't have the list in
Yes.
front of you. It's just from your experience now. Please don't go and Google it and then say, oh, but Ananda said this is the highest risk, and it isn't. But from your experience, what are some high-risk vehicles that people need to look out for?
So, very sad to say, because that was for me my absolute dream car, Toyota Prado, a massive problem at the moment. You almost need 3 tracking devices just to insure your car. The Toyota Fortuner is a big problem. The Ford Ranger is a big problem at the moment, and the Volkswagen Polo. Those would I say would be your 4 almost highest risk vehicles to buy. I'm always and I don't want a lawsuit against me from Polo, but I'm always amazed when I still see people buying those cars. They've been on the high risk list for so long that ultimately, why do you want to put yourself in that situation, especially as a woman, men as well, but as a young student,
Yes.
driving around, why do you want to put a risk like that on your life?
It was always the City Golfs.
Yes.
That was the high risk. Now it's the Polo. That's
Yes,
the high
absolutely.
risk.
So those are unfortunately your brands.
All right. Okay, guys, thank you very much. It was fantastic having you, Ananda, in the studio. I really enjoyed it. We will definitely have you back, and we're going to get you to come and talk again on the short-term insurance. Any last advice that you want to give listeners before we say goodbye?
Thank you for having us, Lourens. It was lovely being here. I think, you know what? I understand that Facebook and all those are much more interesting at night to go and read, but really do the effort. Go pick up your policy schedule, phone your broker, and try and understand exactly what you're covered for, that you can rectify it before something goes wrong.
Yeah, so start taking it seriously.
Yes.
Because it's not just serious when you have an issue, because then it's too late.
Yes.
Get it done now.
Yes.
So if you want to get hold of Ananda and have her help you do that, email her on ananda@rrh.life or call her on her cell phone 082-427-3493. Guys, thank you very much for being with us this morning. Next week, same time, same place. We look forward to sharing some more wisdom with you on Financially Raw, real, authentic wisdom. And let's play out with our last song. Those of you on our social media, we're going to say goodbye to you. And those of you listening on Berg Studio, we will be playing out on our last song for the day.
Financially Raw, real, authentic wisdom with Lourens from Retire Rich and Happy.